as how you were the former CEO of Goldman Sachs. What percentage level of investment were you not?
You're confusing me with the Treasury
Secretary. I got the wrong firm?
Yeah.
Paulson. Okay. Where were you, sir?
I was a CEO of the Princeton Economics Department.
Oh, Princeton. Oh, all right. Sorry. I got you confused with the other one. I'm sorry. Well, I'm glad you clarified that for the record.
All right. Let's get some takes here. First of all, I want to ask Don Luskin about your pal Marcy Kaptur from Ohio, who thinks Bernanke is Paulson and is running Goldman Sachs. Now, when you see that, I guess it's funny, but it isn't that funny because she kept asking questions like she was from another planet. Now, this is a lefty liberal lady from Ohio. Is she a pal of yours, Don? Did she subscribe to your news service?
Well, you know, that was a very, very funny clip. I had not seen that. I was delighted to see that just now. But, you know, what's so tragically ironic about it is Ms. Kaptur is not the problem. It's Ben Bernanke who's the problem. The problem is we've got an academic running the Fed instead of a guy with experience on Wall Street. You know, the last academic that we had running the Fed was Arthur Burns, and that ended in tears. Bernanke is a very, very smart man, a very nice man, a very clever man, but I think there's a growing consensus that he's in a little bit over his head. Now, you know, I believe he's been way too dovish. I think he's been making a big mistake by he keeps signaling to the market that he's going to cut rates, he's going to cut rates, and the more he signals, the more the market demands. But here's what I can't figure out. I see him caving in, and I don't think he should. But I'm beginning to worry now that he's not even caving in right.
Right. See, that's
let me just finish the point, Larry. Because we're 2 weeks from an FOMC meeting. He's basically promised he's going to cut by 50 basis points. So just do it now. Why are we waiting?
Blame him. You know, we're in a recession. I mean, what are you trying to say? You didn't forecast a recession.
Now you're blaming the Fed. You've been calling for him to slash interest rates for months. This is part of your bear scenario.
I said they would.
What are you saying now? You're saying he shouldn't cut rates? Trying to act like it's the Fed's fault we're in a recession. For goodness sakes, they didn't create it. It was created by all the subprime slime. I said he should be cutting rates.
No, I didn't say that. I said he will cut rates. But I'm saying to blame him
Why hasn't he cut
not
rates?
Cutting rates for the recession is ridiculous.
Larry,
why not blame the Fed?
Larry, may I say something?
Why not blame the Fed?
Hang on a second. Jerry Bohr, you first. Doug,
hey, wait a minute.
Second.
And Jerry, let me say, on January 7th, when I said we're in a recession, you said flatly there is no recession. Now, perchance, would you like to change your view?
No.
No, we're not in a recession.
No, I do not believe we're in a
be.
recession.
Okay.
I don't see any number that says recession.
So
I see a lot
that today
I see
on
a
the
lot
18th.
Of, well,
no
if you ask me a question,
no
let me answer.
Jerry is not flip-flopping. This is a principled position.
You're going to go down the ship, but you won't flip-flop.
Let him talk.
I see numbers consistent with a slowdown, not a recession. And, you know, yeah, is it possible? Sure, absolutely. Anything's possible, but I don't see numbers that show contraction. I see numbers that show slowdown. And, I mean, it's easy to predict recessions, Gary, if you predict one every year. You know, eventually there's going to be one. So every year you say there's a recession, there's a recession.
It's easy to ignore them, and it's easy to wait till the recession is here and the market has collapsed and then said, maybe we're going to have some weakness. That's as handy as a pocket in your underwear.
Gary, excuse me. Gary, you've got to back down a little bit, okay? This triumphalism is completely inappropriate. You were dead wrong for years. Now, you finally got a couple of good months that make you look smart.
A couple of good.
Let's have a little grace about it,
Larry,
okay?
how long have I been right?
Off on the attitude.
How long have I been right?
I think you've said anything about blaming him for the recession. The question is the credibility. That's right. I didn't understand what Gary's getting at. The point about Bernanke is you must follow through on what you say. And he's not followed through, and we've seen this song now weekly for, I don't know, a month or 6 weeks. That's the reason he's losing credibility. Better not to talk, it would seem to be done. In other words, what is your position? Well, don't say anything. Keep your cards close. But he's done it wrong. He's lost credibility. Now I got to ask you, can he regain credibility?
Well, it's going to be very hard to. I think once you've lost it, it's very, very difficult to get it back.
Bernanke never said he was going to cut rates.
Let Luskin finish.
Gary, is your name Don? Was that question directed to you?
All right, we're going to settle down. Let's have some intelligent talk. That's what this show is all about. Finish your position off. Go ahead, Don.
The problem with Bernanke is once he's promised to do something and doesn't do it, the market's going to put him under a great deal of pressure to do it. If he finally does it, then the market will say, well, you only did it because we forced you to. So he's going to have to do something at some point to stand up and exert leadership. He is going to have to do something counterintuitive. He's going to have to do something surprising. And I don't know what that is at this point, but I can tell you what I hope it is. At some point, he's going to have to say, okay, I'm done. I've printed enough money. I've dropped it out of enough helicopters. And Dow Jones can go to 1,000, and that's it, guys. That's what he needs to do at some point here.
What do you think, Don Luskin? Give me a quickie on that. And also this Bush plan today, Don.
Well, let's just talk about the Bush plan. I agree that the Republican Party's in disarray. I guess I'm hoping that Giuliani will be the big surprise in South Carolina and really put it in disarray, where everybody gets to win one. On the stimulus plan, I mean, I wish, stimulate me, but I just don't know. I don't know how you make the economy grow any faster by taking $800 from future taxpayers and giving it to present non-taxpayers and just hoping they buy more potato chips at Walmart. It ain't going to work.
But somebody's got to straighten these guys out. Let's go to Boyer and Luskin. Businesses create jobs. Now, taxes may be an impediment to businesses taking some investment risk, Don Luskin. That's why I think Bush's insistence on restoring the expensing bonus is a big plus in this game. It's probably the only plus in the tax story.
No, it's a great idea. And if Arlen Specter is right, which is when the Congressional Budget Office and the Joint Tax Committee score it, if it turns out that it doesn't have a revenue cost, well, for gosh sake, make it permanent.
Right.
I mean, what's the downside in this? And it simplifies the tax code.
Right.
You treat this stuff just as a cash expense, just like buying a hamburger. What's not to like?
To my free market guys here, Don Luskin, what do you think of this? Do we need a kind of RTC for the mortgage insurance companies, the bond insurance companies?
Well, yeah, that would certainly be a palliative. It sets up a tremendous moral hazard for the future. It just embeds the too big to fail idea. But I want to point out one very interesting thing that happened in the last 24 hours with the AMBEC situation. We've had a world in which for the past 4 or 5 months we've seen capital infusions coming in to support troubled brokers and banks like Citibank and Merrill. For the first time, we've seen one of these troubled financials, AMBEC, get too cheap to accept a capital infusion. It's gotten to the point where the capital infusion they need is greater than their market cap today. So if they took that capital infusion, it would so dilute existing shareholders that the existing shareholders are basically saying, no, you can't do that. And today the company announced that it agreed. So to do the math, hang on, do the math. Let me finish this. What that's telling you is that these stocks have gotten too cheap. Because if existing shareholders would rather see these companies just run off and just pay their claims, and they think the book value is so much higher than today's value.
That's solely the opinion of the management.
So, Dougie,
no, that's also the opinion of some activist shareholders.
So, Dougie, Luskin, what's your investment call tonight?
Prayer. I think it might work.
Prayer's good. Prayer's good. And now, if those who pray on Saturday and Sunday tend to do much better in the stock market on Monday, where will you be going on Monday, Don?
Oh, I'm going to be on vacation like the rest of the stock market.
Tuesday. I beg your pardon. Tuesday. You're buying stocks and selling bonds. Isn't that your strategy?
You know what? I admit that I've been calling the bottom on this decline all the way down. I freely admit it. I've missed this one. But, I don't see any fundamental changes. I'm still a bull.
I'm with you. I still think so. Stocks for the long run.